Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam, Prof.
Waalaikumsalam. Waalaikumsalam, bro.
Okay, we start the class with the recitation of Umul Kitab al-Fatiha. Auzubillahi minasyaitonir rajim. Bismillahirrahmanirrahim. Alhamdulillahi rabbil alamin. Iyyaka na'budu wa iyyaka nasta'in. Ihdinas siratal mustaqim. Siratal ladzina an'amta alaihim. Okay, firstly, I'm not going to use PowerPoint, so I'm expecting all to open their camera, open the camera so that we can discuss, because there will be more towards a discussion. Right? Okay, open your camera, please. Please take, switch on your camera. Okay. Okay, Muhammad Faiz, Nurul Arifah, thank you so much. Minum dulu ya. Alright, so, okay, Ahmad Nizar, Ahmad Nabil, okay. Okay, Riyaus, Shakir, Alia and Nadira and Muawiyah. So how are you all today?
Alhamdulillah, fine, Prof.
Okay. All right, I want to see my students. Switch on your camera. Muawiyah is from Palestine or what? Nadira, Alia. Okay, yeah. Kejap, okay. You can use your tudung or use wear lah. Wear your tudungs. Or if you don't have tudung, you can use baldi also can. As long as it cover your head. Cover your hair kan. All right, so we don't have our okay, Muawiyah. Thank you. Okay. And then we are supposed to have another two international, right? All right, so I've sent you WhatsApp messages now, okay, regarding about the submission of your quizzes. Okay, your quiz you need to submit because I only received 3 quizzes, okay, from quiz 2. So, one from I forgot Muawiyah said quiz 2, right? And then I think the Shakir, okay, Have you sent quiz 2?
Yes.
Okay.
Sudah.
And one more I forgot. Okay. But the rest have not yet sent. So I have already extended the due date. And then for quiz 1 also, I'm not really sure if everybody has sent. So I need you to send it again to through goals. Okay, through goals. All right. So basically that is evidence lah, because some of you said maybe you have sent the email but I didn't receive. You said maybe the email is bounced ke apa ke. I'm not sure about that. Okay, so you have to send through goals. Okay, as evidence lah. Right. Please make sure that you can enter into your Go system, Go platform. All right, so we don't have exam, we don't have final exam. Your take-home quiz is the replacement of the final exam. So take it seriously. If you don't send, uh, it will have about 40%, okay, of your total marks. Okay. All right. So yeah, I know it's going to be like so many things that you need to do, right? So once in 2 weeks you have to do the take home quiz, but it's better lah that rather than you do the final exam, right? It's better. Final exam is totally you have to do it by yourself, right? This one you have a lot of additional, what you call it, um, assistant, okay, from AI, okay, from your friends, from your colleagues, okay. So please take the advantage lah to do it properly. Okay. So today, our topic will be is a continuation of last week, which I have not covered. Okay. Last week we have covered on derivative, right? On derivative. So basically, derivative is actually you can either speculate or you can hedge. Okay, again the uncertainties of the future. For hedging, okay, I think it's actually okay for you to use derivative, but if you want to speculate, okay, then it's going to be high risk. Okay, high risk. So we have looked at the derivative. We also discussed about the subprime crisis in 2008, whereby the mortgage property bubble occurred in US, where it goes widespread until globally. So we are all affected by the subprime crisis, but not as heavy as the COVID-19 lah, because COVID-19 crisis impact the whole world, okay? And everybody um, cannot move, okay? We have to stay put in our house, okay? And then the crisis occurred about 2 years, okay? So COVID-19, you can see that the market has fallen down very large extent compared to the subprime crisis, because subprime crisis, the crisis originated in the US, okay? So that's why its impact towards the global, even though it's do have impact, but it is not as big as the COVID-19, because COVID-19, the whole world facing the crisis. All right. And then we have also, I'm not really sure that we have discussed about private equity, but private equity is actually you are using the I call it the venture capitals. Okay, venture capitalists normally. So private equity, okay, if you are, for example, in Malaysia, I'm not talking about in Palestine or in India or in Kazakhstan, okay, or in Bangladesh. So if we look in the case of Malaysia, okay, we have several types of what call it business ownership. Okay, first is actually a sole proprietorship or an enterprise, or we call it here in Malaysia we call it perniagaan tunggal. Okay, sole proprietor. So whereby you are the boss, you are also the staff. Okay, basically, so you the accounts. Okay, is not that difficult because basically it's actually a sole proprietor. Okay, so your asset is also the business asset, and your liability is also the business liability. So that is normal sole proprietorship. Okay, then we have company. Okay, company, or in Malaysia we call it sendirian berhad. So company, okay, you have the shareholders. Okay, the owners are called shareholders. The shareholders can be up until I think 50, if not mistaken, but you might want to check back again. Okay, and then if you want to become the shareholder, you have to put in capital. Okay. So once you put in capital, for example, 100,000, you divide by 3 people or maybe 10 people. So you are the shareholder of the company. So every year, okay, you will be called for the annual general meeting. So the directors, okay, will actually CEO will present the performance of the company. And then if you are lucky, if the company is making money, and the company has a favorable dividend payout ratio, okay, so you will have dividend, okay, from your investment. Okay, but that is private limited, Sendirian Berhad, okay, private limited. So it's only limited to the shareholders only, right? Then we have another type, which is um, the Berhad, okay, Berhad, which means that it can goes up to more than 100, if not mistaken, shareholders. Okay, and it's normally it can be listed or non-listed, which is public listed or not public listed lah, Berhad. Okay, but this okay, for the company and also the Berhad entity, basically your asset and your liability is different, separated from the company. So if the company is not making a lot of money or having problem with the financial standing, the you are cannot your properties are cannot be touched. Okay, it's actually totally separated. Okay, so that is the difference between sole proprietor and also senior berhad. Now, okay, what this? Okay, this is a bit introduction lah. Okay, miftahul al tijarah fi Malaysia. Mhm. Okay. Uh, when you talk about the company and also berhad, okay, if it is not public listed, not public listed. Public listed means that it is actually listed in the stock exchange. So anybody can buy. Okay. For a company or private limited, it is not listed. Basically, if you want to become the shareholder, okay, so basically you need to get an offer or you offer the company to sell the shares. Okay. To sell the shares. Okay. So basically, we call it as private equity. When do this thing happen? Okay, this normally happen, okay, when a small company, okay, which is performing well, maybe a coffee company, okay, coffee, company that producing coffee, maybe restaurant, I mean, a coffee shop lah, coffee shop. Then suddenly it want to be listed, okay, it want to be listed in the Bursa Malaysia. Okay, from a small company, then become big. We call it open a lot of branches. Example, KK Mart. KK Mart, I think KK Mart kan? Kan? Speed Mart ke KK Mart yang masuk bursa tu. KK Mart kan? Speed Mart. KK, okay. KK Mart, okay, example. So before entering into the bursa, okay, before entering to bursa, maybe 3 to 5 years, okay, before going, or maybe 2 years before, okay, the venture capital, okay, venture capitalists, they will identify that this company is potentially, okay, becoming a cash cow, right? So what they do is that they will offer, okay, to become the venture capital, the venture capital, and it is also offering some of the shares, okay, towards to other potential investors such as institution, okay, or maybe high net worth individual, okay, but not to retailers, okay, but not to retailers. Retailers cannot buy, okay. High net worth individual, yes. Institution, yes. Because investing in the small companies, startups, we call it startups, is very risky, very, very high risk. Okay? Very high risk. So, retailers don't understand, and basically retailers or normal rakyat lah. Okay, normally if they invest, they think that their investment will always make money. Okay, they believe, okay, whatever, okay, investment that they enter, okay, they will make money. Or if they lose, government will assist. Okay, but startups, no. Okay, normally, okay, startup, okay, for example, in if we look at 10 startup, okay, 10 newly startup, okay, 8 will fail. 8, 8 gagal. Only 2, okay, survive. Survive and then becoming big now. Okay, that is the nature of small businesses who wants to become big. Okay, basically 8 out of 10. Okay, that is like the magic number. Okay, magic number. Why they fail? Yeah, there are a lot of reasons. Okay, entrepreneurs. Okay, characteristic, or maybe the market is not what call it favoring to the ideas, or maybe they are too advanced in terms of the ideas. Okay, there are a lot of I call it reason, or maybe political issues and so on. Right? So it's very risky. So that's why private equity normally are taken by the venture capitalists. Okay, they will actually scrutinize the company very, very thorough. Okay, they will scrutinize, they will do the due diligence very thorough so that, okay, whenever they invest, okay, they can make profit. And amazingly, okay, once they, we call it, once the, for example, if the company managed to go listed, normally they will become the angel investor, okay, before the company going for listing, okay. Once listing, they will cash out. Understand? Okay, these venture capitalists will cash out, and they make 200 or 300% profit. Okay, within that time that they hold. So they make a lot of money, but the risk that they bear, okay, is very large if the company did not manage to go for listing. Okay. Okay. Any question for private equity? Any question? Sekejap saya nak cuci. Saya cuba bincang sekejap. Any question about the private equity? Risk very high, eh? The risk is very high. So you might want to also consider if you are a fund manager lah. If you are a fund manager, you can also invest in private equity, especially for companies that are going for listing. Okay, but it's very rare lah, or maybe very small. Okay, very rare and very small, because the risk is very high. One of my PhD student, he has been working in the venture capital industry. So he's doing his PhD in venture capitals lah. So what he's trying to do is that to offer to develop a model which is reducing the risk, okay, of the new startups by including some what I call it protection mechanism, okay, and also to include on the wakaf contracts lah. So very interesting. So still waiting for his thesis to be developed. Okay. Now the third one is real estate. Okay, real estate. Now this is very dear to us, right? Because normally, okay, our parents say buy real estate. Your grandparents says buy a house. Okay, so that you can stay there and you have a house. Correct. Okay. But investing in real estate, okay, investing in real estate, you need to consider what I call it a certain things. Right? For example, when you buy a real estate, okay, there are a lot of elements, okay, that you need to consider pre-purchase, okay, pre-purchase, during the purchase, and post-purchase. Okay, so when you buy a property, a real estate, you don't only buy the house. Okay, you don't only buy the house. You also have to pay for the stamp duty. Okay, you have to pay for the lawyer's fee. You have to pay for the renovation. Okay, when you enter the house, you have to pay for the renovation. So the selling price is not the total cost that you are paying. There are many other costs. So that is only what I call it pre and also during the purchase. Okay, so a lot of things. Okay, then you have to put in the what I call it furniture, bed, okay, your kitchen cabinet, fridge, okay, your dining table, okay, and many more. Okay, right. And then a house, I'm not really sure in other countries, but Malaysia normally they install the grills, okay, grills to protect from burglary. Okay, grills, But in US and UK and US, they don't install grills. Okay. Uh, if I can say lah, from where I stay when I was a student. Okay. Last time in US they don't have grill. In UK also they don't have grill. So basically, if they want to enter, they enter. Something like that. Okay. It's only the glass. Okay. All right. So that one is during the purchase. After you purchase, then you have also to cover the maintenance costs. Maintenance costs such as, everything lah. If an apartment, you have to pay for maintenance fee. If it is a landed house, you have to pay a lot of things lah. IWK, you have to pay for quick rent, you have to pay for the what I call it, the cukai tanah, okay, right, and many more. And also, okay, a property need to be maintained because it depreciate, okay, depreciation, okay. Sometimes the roof, problem with the roof leaking, sometimes the tiles, okay, I call it broken, okay, the toilet broken, and many more, right? So buying a property, okay, you will encounter all that. Okay, you will encounter all that. Now, but here I want to differentiate between buying a property which is for your own stay and for investment purposes. Okay. Now, a fund manager might not be investing in the real estate. Okay, might not be investing in the real estate, except for maybe tabung haji ke ataupun khazanah. I'm not really sure. But normal fund manager, they seldomly, we call it, invest in real estate. I mean, in brick and mortar lah. Okay, they don't. Okay, but they can invest in real estate investment trust, REITs. Okay, REITs. But let's discuss about the brick and mortar first, which is the wall that you buy. You can say the wall, okay, and the roof, okay, that we buy. When we talk about the real estate property, as I mentioned before, okay, we have to differentiate between the property that we stay ourselves or on our own use compared to the property that we buy for investment. Okay, there are totally different game. Okay, totally different game. Now, if you remember last time when we calculate the high net worth individual, okay, high net worth individual is having a net worth of 3 million and above, right, in Malaysia. If you have your net worth above 3 million, you are high net worth individual. Then you can buy, I call it just now, private equity. You can buy, you can do short selling and so on. So to be a high net worth individual, okay, you must have 3 million, but the 3 million net worth, which is asset minus liability, okay, asset minus liability to the 3 million. So must exclude the house that you are staying. So if your 3 million is including your house, then you have to minus that. Okay. Okay, that is how they calculate high net worth individual. We have to minus the house that we are staying. So if our house is 1 million, then we minus 1 million. So basically, we are not yet high net worth if we take into consideration the house that we're staying in. Okay, so why do actually they take out the house that we stay from the calculation.
Because the house not generate any income.
Yep, correct. Because the house do not provide any income. And probably the house is actually becoming just a liability because we're staying there. We have to pay maintenance, we have to pay the quit rent, we have all is actually taking our money from our pocket. Okay, so that's why it is actually taken. That is from my reasoning. Okay, so basically, when you buy a house that you stayed in, that is not actually an asset. It's still considered as liability. Okay, but the house that you buy and then provide positive cash flow, which is your rental is above your installment, that is considered as an asset. So here, if you want to invest, okay, you cannot say that, oh, I want to buy a house that I want to stay, and that is considered an investment. No. Okay. You must make sure that okay, the income okay is generated from the property. If the property is actually making losses, so it's just like buying a stock which is going down, making losses. Okay. The stock price from 3 ringgit, it become 1 ringgit. Okay. No, 3 ringgit to become 6 cents. Astro. Astro. to okay, Astro. You know Astro? Okay. Astro, the TV, telecommunication TV provider, Astro. Okay, the share price was 2 ringgit and 97. Okay, and then now it's actually only 6 cents. Okay, do you want to buy? Is it a big discount? Okay, it's very risky if you want to enter because why? This is just like uh, the computer theory, which means that the uh, the new technology actually uh, kill okay the previous technology. Okay, Astro last time people watch Astro, watch TV. Now if you want to watch TV, they watch Netflix, they 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 watch what you call it handphone, right? YouTube's and so on. So that's why Astro is not making money. I'm not really sure. I didn't look at the financial report, but I think because of that problem. Okay, right? I do not do a very thorough analysis on Astro. I just look at the chart. Okay, from 2 ringgit and 97 to become 6 cents. So it might be because of the technological aspect. So they need to do something to turn around. Okay, the business. Okay, all right. Okay, going back to the asset. So if the asset is not making money, it's just like a stock which is losing its price lah. Okay, the stock from 2 ringgit 97 to become 6 cents. So it's not an asset. Actually, we can call it a liability lah. Okay, all right. So now we have the question of the traditional, what I call it, normally our ancestors, okay, our grandparents, our parents say, go and buy a property. Okay. But they didn't say, go and buy property that make money. They only say, go and buy your house. Okay. Indirectly like that lah. Go and buy a house so that you can stay there with your wife, with your children, so that you have a house. Okay, there is a roof, okay, for your family. But they don't actually know that if you want to become what call it, a property investor, okay, you need to buy a house that actually positive in terms of its cash flow. Okay. Now, what what I've been telling you about positive cash flow, which mean that your rental income is higher than your installment and so on, right? But this is only one from the two strategies in property investment. Okay, there are two strategies in property investment. Two strategies. Okay, write it down. First is the cash flow strategy, which means that you buy a property, okay, the end game is to get positive cash flow, money in your pocket. Understand? Okay, money in your pocket every month. Halas. Okay, that is the end game. Money in your pocket every month. Kullu, not kullu sana, kullu shahril, kullu shahr, right? Positive cash flow. Positive cash. And and this is the strategy that you need to understand. Okay, there are certain ways of doing it. Okay, example, if you want to get the cash flow strategy, you need to stretch your installment as long as possible. Okay, stretch the installment as long as possible. Why? Because we want the installment to become very, very small as possible. Why? Because we want positive cash flow. Rental minus installment, positive. If we have a short, okay, tenure, okay, installment, the installment will be high. Okay, installment will be high. Sometimes installment is greater than the rental income. So it's negative. So if you want to go for cash flow strategy, you have to stretch the loan tenure. Okay, so that installment is very low. Okay, but don't worry if you have 35 years of installment, because the installment will be paid by your tenant. Understand? Okay. But that is only for asset that you want to rent out. But if it is for your house, as short as possible. Because who's paying the installment? You yourself, okay? So that's why you need to make it short, okay? For your own house lah. It depends lah. Sometimes you think you cannot afford to pay that much because your income, right? But to make sure that you are not stressed by your housing installment, you make sure that your income is very high lah. Right, your income is very high. Do business, mafi mushkilah. You become investor, mafi mushkilah. Okay, but if you just work as a normal employee, then you need to find, okay, smaller house. Okay, smaller house and low installment. Okay, but actually, if you are a businessman or you are an investor, a small house is better. Okay, because less stress, less commitment, financial commitment, less place you need to, what I call it, to clean, right? So a research has been conducted. The ideal space, okay, is only about 1,000 to 1,200 or 1,005 square feet only. Okay, that is sufficient, and you are already happy. Okay, but if you are living in 300 square feet, maybe you are not happy lah, right? But 1,002, 1,005 square feet, halas, maafi mushkil. Okay, right? So, why we need to have 4,000 square feet, okay? 5,000 square feet, house, bungalow, right? So sometimes I was not told about that, okay? So my house is a bit big, okay? In terms of square feet, it's not 1,002, it's not 1,005, it is not 2,000, it's more than that, right? So now we can see that it's actually stressing, stressful because you need to clean, okay? So big, okay? You need to, uh, I mean, a lot of places that you need to monitor or so basically I think it's actually better to have a smaller space. Okay. All right. Now the other strategy. So this one is the cash flow strategy. The other strategy is we call it um flipping. Okay, flipping strategy. So one is cash flow, the other one is flipping. Okay. Flipping is you buy with the intention to sell. Okay. So you are not holding it for cash flow. You buy and then for maybe 5 years, then you want to sell. So you are speculating that the price of the properties at a particular time is going up. Okay. So this is flipping. Okay. Buy, maybe it's sub sale, or maybe you are buying from newly developed, new development, okay, maybe from auction, okay, then you sell, maybe after 5 years, because after 5 years, you are not being charged for the RPGT, real property gain tax, cukai hartanah tu, okay, tak perlu bayar, tak ada, kosong. Before that you have, okay, there are percentage, okay, until 5 years and above, okay, you don't have to pay tax to the government. And this is only suitable for Malaysia. I'm not talking about India, Bangladesh, Palestine, or Kazakhstan. Kazakhstan or Kazan?
Uzbek, Prof.
Oh, Uzbek. Ya Allah, asyik lupa saya ni. Tapi tak datang punya. Siapa nama dia?
Amin.
Ha. Okay. Yang from Bangladesh. Ha, ni. Aisyah. Aisyah Rahim. Ha, ini Aisyah ni. Okay. So, property investment, flipping is actually you buy and then you sell. Buy low and sell high lah. If you buy high, sell low, then you're gonna be bleeding lah. Right. It can also happen, yeah. So wrong strategy, maybe wrong location, okay, wrong timing, or maybe right, you buy very high and then you sell very low. Okay, this also happen because one thing about property investment nowadays, there are a lot of we call it nonsense package lah, cashback. Okay, we want to buy a property price. Normally an apartment is about 400,000, 300 to 400,000, right? Then suddenly they sell apartment or condominium at 700,000, 900,000, then you receive cashback. So that is actually you are borrowing money. Okay, you are not buying the house. Maybe the house is only 400 to 500. The rest are all the cashback. Maybe okay, 200,000 cashback, 90,000 cashback, right? 100,000 cashback. That is actually borrowed money. Okay, borrowed money. Your installment will be high. Okay, your installment will be high. The problem is that when you buy with cashback, okay, when you want to sell, you notice that the price is not that as when you buy. Okay, you buy maybe at 900,000, 700,000. When you want to sell, it become only 500,000 or maybe 600,000. Okay, that is the market price there. So the 700,000 or 900,000 is actually including the cashback. Okay. So,
Prof,
yep.
Prof, regarding the selling price of the house, in Malaysia they have any regulation that if developer want to sell their house, they need approval from the any regulator on aspect of the selling price, or developer can sell whatever he want.
Developer can sell at the price that they want lah. But the government has said, okay, for a certain area, they must have, for example, certain percentage to cater the B40, the M40, and then the high end. So that one lah. So they control in term of that. But in terms of price, the government do not control. That's why now the government is actually offering the rumah, prima, affordable houses for the B40 and also M40. Because they cannot control the price. If they control the price, it's a bit difficult. Okay, in terms of uh, controlling the price. I mean, house, as we know, is yes, is a necessity. But the price of what I call it now, the house is actually it is not like a normal house like necessity. Like. If not, they will only building a small house, maybe a flat, right? So now, that's why the price cannot be determined now. If they determine the price, they can see a lot of flats, maybe a lot of the small houses, or we call it PPRT house, right? PPRT house.
Because
Okay.
nowadays on the market, we always hear that developers are selling a future price is not reflecting the current price. So for capital appreciation, maybe take more than 10 years as compare previously just 5 years we can sell and gain a profit, right?
Okay, that one also in term of that. Okay, if you are asking me in term of the government, what call it, the authority head, yeah, I will actually answer differently. If I want to answer as an investor, then I will also answer it differently. Okay, so I cannot use two hats at the same time. So you want the answer from which part?
From the investor view.
Okay, from the investor view, okay, I personally, okay, I will not buy the house which is overvalued. Okay, so houses which have the cashback or whatever, I would not accept lah. Okay, accept that the cashback we will not accept. Okay, we only look at the selling price, normal selling price without the cashback. And one more thing is that um, to become an investor, okay, as a small investor as me, right? I'm not like Kazana for tabung haji, right? So I will only buy properties within within my capability lah. Okay, within my capability, and also if the property is more than, let's say, 300,000, I don't buy it. Okay, for apartment lah, kan? 300,000. Okay, I will try to find 200 over. Okay. So if it is 500, 700,000, bye-bye. Okay, because I think I cannot get, because I'm a what you call it, buy and hold, cash flow. So I believe that I cannot get the, no, I don't want to be negative, but normally the rental cannot, what you call it, cover the installment. Okay. Because if it is 900,000, the installment should be about 5 to 6,000. So how do you want to rent out an apartment, a condominium, 7,000 ringgit, 9,000 ringgit, right? So quite difficult. Yes, there are market, but the market is so niche. Okay, so niche, so small. Okay, you need to be in that circle, then only you can actually get to get the customer lah. So I will try to get properties which is within my range. Okay, 200,000, 300,000. Okay, then only I can talk. So that is from an investor point of view lah. So if you want to ask whether should we go and buy for flipping strategy, I do not really sure because I'm not a flipper. Okay. Flipper, yes, you buy five years, then you try to flip. But if you buy a property which is under stress, okay, normally property under stress is very cheap. Okay. Okay, it's either auction or either desperate seller. Okay, desperate seller, for example, he want to go overseas, he want to go overseas, stay overseas, and he want to sell the house very fast. So he is willing to sell it below market value, right? As long as he can get cash. So you buy the house. Okay, within 5 years, it might has already give you a very good profit lah. Okay, in 5 years. But if you already buy that house which is 900,000, 700,000, okay, the apartment, okay, the condominium, it is definitely the price will not be more than 900,000. Okay, it will always be like maybe 600, okay, maybe 650. Okay, so within 5 years, okay, maybe 10 to 20 years, okay, it can go to 1 million. Okay, so that's my answer. Okay, thank you. All right, so okay, basically we have this hedge fund. Aisyah lagi. Okay. Now, if you we have discussing quite a bit about hedging, derivative last week. We also discussed about the private equity, real estate. Okay. Now we can see that all of these are having different risks. Okay, different risks. Real estate, for example, you buy very high, then you sell very low. Right? And in the meantime, you also have to pay maintenance fee. Okay, apartment, you have to pay maintenance fee. For a condominium, sometimes maintenance fee can go to 500 to 600 or 800 per month. Okay, condominium. And you can see that many people cannot pay their maintenance fee. Okay. And also, if you look at private equity just now, okay, the company can go bankrupt, okay, before it go listing. So very high risk. You lose all your money, all your investment. Okay. For hedging also, for example, derivative, also you can lose all your money, right? Because if you remember subprime crisis, okay, so many investors has been affected, okay, losing all their money when the mortgage crisis explode, right? Okay. Now, there are also other investment which we have discussed also last time. Gold. Okay, gold is also an investment, right? But I don't actually call gold as investment. Why? I don't call gold, okay, buying gold as investment. Why do you think?
Because the gold didn't give a dividend or
Correct.
don't.
It doesn't give it dividend. Okay. One thing that if you want to identify any good investment scheme are scammers if they promise giving dividend. So it is, we call it scam. Okay. Because gold is actually savings. Okay. Gold is saving and it's safe and also hedge against inflation. So which means that we know that inflation is there, but if we save in the bank, okay, inflation will eat our money. Okay. But for gold, normally it's actually inflation safe haven. So it can actually beat inflation. Okay. But it definitely cannot become like investment, like giving dividends and the price goes up. And last time we do have like a very high gold price hike, right? Whereby gold goes up until $5,200 per ounce. I think last year, maybe December or January. Okay,
December of
okay. Now gold has already, we have discussed, has already um, reached
2000.
the moving average 200, right? And after that, it goes down. Okay, the signal we mentioned, I think in the previous two classes or what? Last 2 weeks or last week?
Last
About
two
the gold
weeks.
last 2 weeks, right? So basically, it actually breached or broken down the support of dynamic moving average 200, which is signals that is going to go for a downtrend for a while. Okay, if the price is above 200, okay, then it's actually an uptrend. Okay, but if it is below 200, it's actually a downtrend for any stock, gold, Bitcoin, or whatever instrument. Because moving average 200 is actually the average price for 200 days, almost a year. Okay. So if it is above the average price of 200 days, then it's actually going up. Okay, going up. So gold also have risk. Okay. Gold also have risk. One is actually you buy at the top. You buy very expensive, then you want to sell very low. Okay. All right. So basically, gold is not suitable for a trader. Okay. Very high risk. Because nowadays the youngsters, they like to trade. They use gold as their financial instrument, but they are not using the physical gold. They are using the online, okay, digital gold, and and uh, and the risk is that they don't trade one to one. Okay, they don't trade one to one. What they do is that they trade using leverage. Trade using leverage, we mean they are using debts lah, utang. Tapi it's not directly from they are getting loans from the banks, then they trade. No. Okay, the platform itself provide the leverage. So the platform provide the leverage. Sometimes one, okay, can go up to 888 or maybe 999. Okay, maybe 10. Okay, the small one may 1 to 10. Okay, 1 to 888. Which means that with your $1, you can buy $888, something like that. Okay, so so that's why they can actually buy the gold contract, for example, 0.1 or 10 cent. 10 cent, so you multiply with 8888, something like that. Okay, so whenever you include leverage into the trading, so the risk will become higher, very high. That's why you can hear some of the youngsters say margin call. Margin call, which means that their money has blown off lah. Okay, the account has blown. Okay, if the account has $500 margin call, so that $500 blown, finish. If 5,000, 5,000 finish. If 10,000, 10,000 finish. If $100,000, that $100,000, poof. Okay. If 1 million, 1 million also finish. Because even though the money is big, you are using leverage. So you are not using only 1 million. You are using maybe 1 million times 888. So the account is very big. Yeah, when you win big. When you lose big also. Okay, sometimes you can go for margin call lah, blow your account. All right, so that's why other alternative investment will have different risks, and the risk will also magnify if you use leverage, if you use debts. Okay, understand? Okay, now let's say, okay, what I am trying to say just now. Now, if in normal circumstances, okay, you invest in the money market, in the unit trust, in the stock market, in the derivative, or in the Bitcoin, or whatever, we know that all these assets have different risks. Okay, money market is the lowest risk, correct? Then unit trust or bond suku is higher than money market. Then unit trust is higher than suku and bond. Then it comes to stock, higher than unit trust. Then you have derivative, which is higher than the stock. Okay, then you have Bitcoin or whatever lah, which is higher than the rest lah. Okay. So in the normal circumstances, when you invest without any debt, okay, that is our normal way of looking the financial instrument risk. Okay, because we don't use any debt. But once we use debt, okay, the risk is magnified. Okay, so it will become higher risk. Okay, higher risk, because normally we use 100, okay, but we can buy 1,000, example. Okay, same as a house. You use 30,000 your capital, the rest loan, 270,000 is loan. So there will be risk. The risk is if you cannot pay your installment, okay, the bank will foreclose. The bank will foreclosure, okay, for sale your house. Okay, lelong, auction. Okay, the bank will auction your house within 3 months of non-paying. Okay, you're not paying 3 months. Okay, 6 months, your house will be auctioned. Okay, so very risky, right? As compared you buy cash. Okay, if you buy cash, risk is still there, but bank cannot, okay, foreclose your house. But the government still can take your house lah. That's why I said the risk is still there. Government can take your house if they want to take, kan? They want to build a highway, okay? At the place your house is being built. So there's no, macam mana? Bagi je lah, kan? Contoh. So that's the thing. So basically the risk is still there, but the risk of using leverage, using debt is higher. Okay. So we can take a break for a while. Okay. So now at 3:15. Can we come back at 3:30? 15-minute break? Because minum dulu. All right. Can we join
Okay,
back
Prof.
at we talk about other REITs, ETF, and also index fund lah, ETF lah. Okay. All right. Okay, can we take a break first?